The True Potential portfolios now have over 1.5 billion invested since we launched in October 2015, so we would just like to take this opportunity to thank you all for your continued support. Looking at performance over the month, we have seen some negative returns as certain asset classes have struggled over the period. However, performance since launch has been strong, with the aggressive portfolio returning almost 21%. What this illustrates is that investors who have taken on higher levels of risk during this period of uncertainty have been rewarded. Moving on to look more in depth at what's been happening in markets, what we are seeing is a turn in the economic cycle. Inflation is returning and we are in a rising bond yield environment. Over the past couple of months, our managers have been making changes to the funds, anticipating the change in bond yields and reducing duration within their fixed interest portfolios. Our managers have also been looking more towards value as a style, which has worked well over the past couple of months. One thing that's important to note though is that it's not just our managers making changes to the asset allocations. We here at True Potential also make changes at the fund allocation level, constantly aiming for the optimum allocation when rebalancing. The rebalancing which has taken place this month lies within our portfolios at the lower end of the risk spectrum, so the defensive, cautious, cautious plus, balanced and balanced plus portfolios. With the exception of the balanced portfolio, holdings in SEI have been reduced due to their exposure to minimum volatility equities, an area of the market which has seen huge inflows at the start of the year, however now is beginning to look overvalued. The defensive portfolio has seen an increase in 7IM due to their low duration bond holding, which is less sensitive to changes in the interest rate. Also, for the cautious portfolio, we have increased the Schroders fund as they have low bond exposure along with a larger weighting in cash. Within the balanced portfolio, we have seen a reduction in Allianz as we have looked to minimise risk within the portfolio. What we've also done is we have increased the position in the Close Brothers fund as they have a larger positioning in US equities, an area which could see attractive growth in the upcoming months. For the Cautious Plus portfolio, we have reduced the holding in the True Potential SEI Defensive Fund and increased our holdings in both the True Potential Schroders Balance Fund and the True Potential Close Brothers Balance Fund. Looking at the Balance Plus portfolio, the True Potential SEI Cautious Fund has been reduced, and we have introduced the True Potential Schroders Cautious Fund, providing increased fund manager style diversification. For the rest of the portfolios, we have kept all allocations the same, with our 4 optimisation factors continuing to be paramount within the portfolios.